Hello, everyone, and welcome to MarketBeat Mondays. So glad you could join us today. As usual, we have our MarketBeat analysts Thomas Hughes and Chris Markoch with us to go over what is moving the market today. If you are new here and you're just joining us for this first live stream, we are so glad you're here. If you have been on our channel before and you watch our regular post throughout the week, this is very different. Chris and Thomas are going to give a cold look at the stocks that you put in the chat. So these are not things that we prepared ahead of time. It's just a cold look at whatever you want to talk about. And that is the whole point of what we are doing this live stream for, is to interact with you and talk about the stocks you want to cover today. So Chris and Thomas, we're just going to start out with a quick look at what is happening in the market and some preview a few things that could be coming up this week that could move stocks. And then we're going to jump right in to some of the stocks that have already been put in the chat. There's a lot of great ones already, some big moves. I can't wait to get to them. But Chris and Thomas, Thomas, why don't you start? Talk about kind of how the market opened up today and what you are watching in the week ahead for potential market movers still coming this week.
Well, there was a little bit of softness this morning, but it wasn't too bad. The market kind of recovered and traded fairly, within a tight range, fairly calmly today, kind of in a wait and see mode. We're kind of waiting to see what happens with Iran. To me, that's more of a distraction than anything else. As far as that goes, the real elephant in the room is oil prices, which are still high and potentially going to get higher if the conflict's not ended fairly soon. But as far as catalysts go this week, I think the Trump Z summit that's on track for like Thursday, I think, is the big market mover. It'll have headlines touching probably all sectors, but the way that trade relations are, that's certainly going to be a market mover. Could alter the future course of tariffs, trade relations across the board.
All right, very good. Chris, anything that you were watching in particular this week or anything that stood out to you and how the market kind of opened this Monday?
The fact that the market was kind of flattish today didn't really surprise me after the run up it had going into the weekend. It just seemed like today was a day when things were going to take a pause, especially when you had the Iran news over the weekend, which really wasn't that unexpected, but still it's kind of sobering to hear. Let's just say that. But as far as this week goes, we've got inflation reports from the CPI is out tomorrow morning, and then I believe the PPI is out Wednesday. The more important number to me of those two numbers is always going to be the PPI, because that's the one that is talking about what producers are feeling in April, which means that's going to forecast what the CPI is going to show later on. And I'm not expecting to see a big surprise with either of these numbers, which means that I don't think it's going to change the direction of interest rate policy really one way or the other. But I think if there is a surprise for either of those numbers in a big way, then that could be a market mover. But PPI would be the one I'd be looking at more importantly than CPI.
All right, very good. Well, let's get right into some of the stocks that our people want to talk about in the chat today. And I'm loving this one, Thomas. I have to start with it. Somebody said, thanks for your due diligence on AMD. He owes you all the beer for the great recommendation. I love this. But some other good questions about AMD in the chat today, too, are asking about, is now a time to take some profits on AMD? Both AMD and MU were the questions. So let's just look at the chart for AMD. This one has been going crazy. It's up 86% in a month, up 115% in 3 months. It's been a great recommendation. You've been recommending it for quite some time. What's your take on where it's at right now? And do you recommend adding or taking some profits right now?
Well, it's certainly not a bad time to take some profits if you got them to take. I mean, it's always good to take profits. The market certainly is up quite a bit. I think this move really has just gotten started. As far as adding to your position, you're probably going to want to wait for some kind of a pullback because the market is up pretty high. But again, with this thing already in play, waiting is also risky. This is the one that's kind of hard to call because the market has already moved so much. The outlook's pretty robust, but there's also significant risk of corrections and pullbacks along the way. So if you have profits to take, not a bad time to take them. If you want to get into the market, wait for some price weakness or a pullback, but don't count on one coming.
Yeah, one thing I'm noticing, we often look at what short interest is doing on some of these names after a huge run up like this. Short interest is doing almost nothing on AMD, which kind of tells you that nobody's betting against them really failing right
Oh
now.
no. Right. The outlook for AMD is really very robust. This movement was really rooted in the outlook for GPUs, which is very strong, and the catalyst is the MI450 launch. But then it got accelerated by Intel's results because now it's the CPU and a GPU story. And the outlook for revenue is really just swelled beyond belief. I think the way that the AI infrastructure and ecosystem is developing, AMD, its revenue really could exceed NVIDIA's. I see a pathway for NVIDIA's GPUs really being the brains of these really giant multi-data center supercomputers, in which AMD data centers are kind of arrayed around that NVIDIA brain in kind of a spoken hub scenario. So to me, this is an early phase story with quite a long way for it to go.
All right, I want you to take a quick look too. I'm pulling up Micron really quick too, and then we're gonna look at a couple of the other storage names that people put in the chat too. This one though, Micron, also similar story to AMD, up 92% in a month. It's also on fire. Is this one where you would also look at taking profits with where it's at today?
For sure. Today's candle through a gap. We've got a small doji forming. So it's still early in the week. That signal could go either way. But right now, the market is certainly showing signs of potential peak. However, that being said, the signs also suggest that if we were to get a pullback, it would not get very far. We'd probably see a bottom pretty soon. The rebound will probably also be very vigorous and to set another new high.
All right, very good. Well, Thomas, I'm going to have you look up MRAM and GSIT. These are other smaller stocks kind of in the memory space. So MRAM and GSIT. Chris, I had you look at these earlier, so let's talk about these right away. We had somebody ask early on, even before the show started, about gaming stocks. So we're looking at Nintendo and EA, and which one is a better short-term buy right now? Chris, these charts look wildly different right now. What's the story here?
So it's an interesting question because of the charts, and I understand the question because of looking at the chart. So you've got, on the one hand, Electronic Arts that it's been up sharply since October, but after it got up to its high in September, it's been sort of flattish. It's been looking to rally. It's just kind of held its ground. On the other hand, you got Nintendo, which has been not having a very good year to date. It's down almost 34% year to date, and it's been in the downtrend since probably before that, since about November. My short answer for this investor's question would be, I don't really love either one. But if I had to pick one right now, I'd say probably go ride with Electronic Arts. And my reasoning for that is simply because of what Nintendo has said recently. Now, I loved Nintendo a year and a half ago. You know that, Bridget. We did a video on this. I loved it, but they've had to raise the price in their Switch because of higher memory costs, and they're still guiding for lower Switch sales for fiscal year 2026. So that's not really a good combination for a stock that's already down about 34% this year. I can understand that investors might think there might be some asymmetric upside there, but I'm thinking no. I'm kind of saying if you're going to go with one, go with Electronic Arts right now. Stay away from Nintendo until you see evidence that it's improving.
All right, that's a good look at these gaming stocks. Those are names we don't cover all that often.
Yeah.
Let's get on to a different name, Chris, that you can look at. It's ADUR. I think this is a new one I haven't covered much on, at least that I can remember. Yeah. So ADUR is the one I want you to look at. Thomas, let's get over to these memory stocks. Have you heard of either of these names before?
No, I haven't. So we've got Everspin Technologies and GSI Technologies, I believe. GSI Technologies. So these are semi-related, not exactly related companies involved with semiconductors and memories. MRAM, Everspin, I think is more interesting. Both are pretty interesting. More interesting because of the type of memory it has. It combines the speed and the permanence of flash and more traditional or longer lasting memory. So it's really effective for a lot of ruggedized applications. And they just got a really hot defense contract worth, let me see, my notes are kind of running together. All right, yeah. So new defense contract is driving the business, driving the outlook, and it's supporting the market right now. What I see in the charts is a really big spike in volume, and MACD accompanying this move. So the market looks pretty strong. Looks like it's gaining momentum. Right now, it seems like the market's really kind of gotten ahead of itself with today's run, about almost 50%. Created a huge gap with a large upper shadow. Shows some people selling into the market. So tomorrow, the next few days, there could be some price weakness, potentially even closing that gap. And for me, that would be a technical signal to buy.
Interesting. That was GSI, right?
That was Everspin.
Everspin. I was on the wrong chart the whole time. Okay, so Everspin, like you said, that one's been up a crazy amount, almost 50% today. Do you know what was behind the catalyst? Were you able to look that up? I know it barely gave you any time to look at it, about why it jumped so much. Is it just that earnings?
Well, no, it's a new contract. Let me pull up the information again. Right, but it's the earnings. It's a government contract. It's potential for follow-on contracts. Really, just affirming the company's business, but also the potential for new follow-on business. Its chips have already, or its technology is already being used with industry, but now we're finding some more applications in the defense world, in aerospace and in space itself, and that's going to drive business long term.
All right, great. Let's take a look at anything different to say about GSI and how is this different? Is it in a different area of memory, or is it in kind of a similar space?
Well, it has memory, but it's not the same kind of memory. Let's see here. Right. It's got a proprietary semiconductor technology. They've made a breakthrough, and it looks like they're getting some defense contracts because of it. And that, again, will be a big business driver.
All right, very good. Anything else to share about these two names? Or should we move on to some others?
Both the charts look pretty strong. I think the chart for Everspin is a little bit stronger. Both of them, though, are showing signs of being at a resistance point where you're going to want to wait for the market to pull back before getting into them.
Yeah, these are huge moves in just one day. Up 50% in a day is always a giant jump to be looking at getting into a stock like this. All right, Thomas, that's good for those. Let's go on to, we had I think every round version of quantum stock somebody asked to talk about. So I'll give you three names for right now: INFQ, IonQ, D-Wave. These three names from different people. So let's do a quick little round robin of the quantum stocks for you on our next time around.
All right.
Chris, you are looking at ADUR. What is this name, Chris?
So this is Aduro Clean Technologies. It's a small cap stock. Market cap's only about 425 million. This is the first time I'm looking at the company. It's a developmental stage clean energy company. So it develops its hydrochemolytic technology, HCT. The goal is to chemically recycle waste plastics and upgrade heavy oils. There's a lot of things that you can like about the stock if you're willing to ride it for a while. This is a company that's not generating a lot of revenue, and it's not going to for a while, and it's not profitable, and it's not going to be for a while. And it had an announcement, it looks like early this year, where it announced that it's got initial operating campaign underway at a pilot plant. But again, that's pilot plant. That's not really at a commercial stage revenue. I mean, there's a lot. Again, it's one of those stocks that I think if you believe in the long-term story and you believe in the science behind it, there could be something here. Right now, it just kind of looks like it's a speculative stock, and I think that's what's been happening I've looked at the chart, and I just think that's what's happening right now. But it's hard to get really behind the stock because there's just not a lot to go on. There's not a lot to go on fundamentally. It just seems like it's, it seems like it's at the whim of traders who like it right now, and they could turn around and not like it just as fast. So
I want to talk about the analyst price targets, and maybe that's why it hit somebody's radar, why they're looking at this one, showing an upside of 108%, and also showing, I mean, the lowest range is a $19 price target. Right now, the stock's trading at just under $14. So why do you think that we have, again, on a small company, you only have a few analysts saying something, but all of these are recent. They're this year anyway that we're seeing these higher price targets.
Yeah. I'm not seeing anything, again, and that's just what I'm seeing in a quick look. I'm not seeing anything that is validating those price targets in terms of near-term catalysts that could generate that. Again, the stock's it's generating very little revenue right now. It's not profitable, but there's some talk that their technology might be able to be used to change the way crude oil might be transferred. But again, I'm just there's talk that the revenue could grow by about 78% this year. But again, until I see that, I don't know. I'm a little skeptical. So.
All right, very good. Let's have you look at some other names here. SIDU, S-I-D-U. Take a look at that one. And also just look at OSS. We've had a few people say that one had a really big jump recently. So look at SIDU and OSS. Thomas, let's do the round robin of the quantum computing stocks. And just a quick note for the people watching, we have tons of people looking to get their stock covered in the chat. There are tons and tons of names in there. I love to see it. I love the interaction. I usually pick names just based on how often I see them come up from different users. I also just try to see if there's one that has something interesting going on, but a sure way to make sure that I cover what you want to talk about is to do a super chat. If you've ever done a live stream and you've done a super chat, it just kind of flags it as one for me to look at. So if you want to do that and want us to cover a stock for sure, that's a great way to have that done. Also, if you have not subscribed to the channel yet, please do. That's a huge help for us to continue doing these live streams every week. So hit like, hit subscribe. It'll help us continue doing these. All right, Thomas, let's get on to what is happening in quantum computing space. You want to start with Inodata, I-N-O-D?
I-N-O-D.
Oh, no, that's the wrong one. I'm sorry. INFQ. INFQ, yes.
Yeah, INFQ, right. So INFQ, all of them kind of together are kind of benefiting from some of the same catalysts. INFQ might be sort of the focus. They did get a deal or a partnership with NVIDIA. They were selected to provide some platform and services for NVIDIA's quantum computing research and endeavors, and that's really juiced the outlook for commercialization. So with the quantum computers, it's really about commercialization, and if they can make money. As far as inflection goes, they're not expected to make a lot of money anytime soon. Only like small millions of dollars this year, like low single digits, and maybe doubling that to a higher single digit number next year. So not a lot of money in that. But then within the space, there are some other things happening. IonQ released its results not too long ago, and it did produce a pretty substantial revenue gain. It's able to commercialize its technology a little bit more. They made $65 million. It's up 750%. And within that, we've got some other quantum computing companies expected to release results like this week or very soon, all playing into this expectation of we think these companies can make money, and it's kind of starting to happen, and we're just waiting and looking for good news to start coming out. Alongside that, the analysts have been pretty bullish. They've been lifting targets and initiating coverage. And Inflection has pretty tepid coverage, but it's all very recent, and they're all pretty bullish, and they're expecting pretty substantial upside. So, we get good news, good reports, signs of commercialization and money flowing, and these stocks could take off again.
Yeah, I'm just looking at some of the growth in these names really quick, and I think that it's important to point out we did a video on this when they were down really low, and then they're up. I mean, IonQ is up almost 100% in a month. So this is the pattern that we've seen with these quantum computing stocks time and time again. Is nobody talks about them, they go down. If you're buying at the range where nobody's talking, and then something happens that kind of spurs on some news and excitement about them, they start making headlines, and they do this. I feel like this is the cycle we've seen a lot almost for the last 2 years. Thomas, what would you say?
It's been a pretty big one. Yeah. There's a lot of hope in this one, a lot of expectations, a lot of possibility. Also, not a lot of revenue, not a lot of cash flow,
Yeah.
plenty of cash burn. So you got excitement driving the market higher, and then reality driving it lower. Right now, we have hope. Hope is helping the market float, and we'll see what happens later on this week after we get some of those results to come out.
Yeah, really quick, one more up for the short-term people out there. Do you think that the bull run happening in quantum computing right now has a higher to climb yet, or do you think that this is already getting close to a top for those quantum stocks and they might start going the other direction? What would it take to know if that quantum rally is going to continue in the short term a little bit longer?
Well, I think that's going to be on a case-by-case basis. Looking at IonQ, technically speaking, there is some upside potential in this one, but there are also some pretty significant resistance targets. So the market for this could top out really quickly, possibly around $60. It could get as high as 80. It just depends on how the news flow comes out and how the market responds to it.
All right, very good. Thomas, we've got a couple of super chats that came in, so I'm glad to see that. SMCI Super Micro, I'm excited to see what you have to say about this one. I know you had some strong words about it a few weeks ago. So take a look at SMCI, and thanks for the super chat, Chris. I appreciate it. All right, we'll get to the other super chat, which is the biotech stock, it sounds like, and that is going to be a Chris specialty next. So Chris, let's cover the two that you were looking at, space stock and OSS, and then I'll give you this other super chat.
Okay.
Let's do SIDU first.
Yeah, sure. So yeah, obviously it's a hot stock right now because it's in the space sector, up about almost 150% for the year, or in the last 12 months, excuse me, and it's about almost 20% for the year, 18.9%. It's had a pretty sharp pullback in the last month. Is it worth getting into right now? Let me see here. Earnings. Looks like they should have just done earnings recently, but we're not showing it on MarketBeat.
Yeah, we don't have the data there, I see.
So I'm seeing a similar story to something that we've talked about a lot on the channel before. And, this is again, we're talking about a very small company, only about a $250 million market cap company. Short interest is fairly high, around 16%, and institutional ownership is very low. It's only about 17%. So those are two things I'm looking at and saying, there aren't a lot of analysts covering the stock. It looks like there's one analyst and it's got a sell rating on it. Of course, that's from Weiss Ratings, which we've talked about before.
Yeah.
It's one of those it's one of those stocks, let the buyer beware. I like the sector. It's just, there's not a lot to go on with this company. Again, very little revenue being generated. It's not profitable. So
it almost feels, Chris, like a little bit about that quantum computing story, kind of, where it gets really popular all of a sudden as people are looking at different space stocks. You can see the massive run-ups it's had, and then it crashes down just as fast. So no, this is a very volatile name. It did have about a 10% jump today. Not sure if that was moving on anything in particular, but do you think...
I didn't see any earnings news. That's the whole thing. I was looking to see if there was anything like that, but...
So I'm curious to see if this could be the start of maybe that next big run up, or if it's just a quick little blip in the system. It's always hard to know when there's no real reason for the move.
It's positioned in that space as a service area. It does a lot of things in the space sector. It's not just a one thing, but I'm looking at the revenue and I'm like, it's just not generating a lot of revenue. It's not profitable. It's just hard to make a long-term case for the stock.
All right, let's go to One Stop Systems quick, and then I'll get you to that biotech super chat that we had. One Stop Systems looks like it's had a really nice run up recently.
It does. And this is another one where I'm going to kind of be Johnny Raincloud here. I think it's just, I I see that move that the stock's made. It's made a really sharp kind of hockey stick move in the last week. I'm thinking a lot of the growth is already priced into here. It's made a real strong move. Again, this is a tiny company, 394 million as I'm looking at it. It just, with this last move, it's above the consensus forecasts for it. This is another company generating the excitement, I think, came from the fact that the number it came in with revenue in last week's earnings was around 8 million, which was better than they did in the first quarter last year. And this is a company that's had a history of outperforming in the second half of the year. So if they're thinking, if we already outperformed in the first half of the year or the first quarter, maybe that sets up something better for the second half. It might, but again, I'm thinking that's a lot of growth that already got priced in. So this might be one investors might want to be thinking about buying when it has a little bit of a pullback, but up 503% in the last 12 months and 121% already this year. Not necessarily one I'm thinking about chasing.
Yeah, I was just looking at that, up 500% in 1 year is a huge run up for this name. I'm curious to see with what it does and then what it actually offers. Do you think it has some long-term growth potential? And I'm curious to see if we're also going to start to see those analysts revising price targets. Not a ton of coverage yet, but the last one that came in, I guess it was this week, of an $18 price target, and we're already trading almost there.
Right. It leaves very little room for upside. I mean, the company's in that area of it's in data handling, data storage. They're I'm looking here. Their portfolio includes GPU accelerated servers, a lot of things. This is what I'm saying. They're into a lot of different areas, and there would be room for the company to grow, but I'm not necessarily sure I see the company as having a moat that I think there's going to be a lot of competition in the space too. So
yeah, good. Well, that was a good look at two different names here. Chris, I'm going to have you do another one of our super chats.
Yeah.
Thank you for this one, Hoka. DRTS. It says very promising results and news on a cancer cure or cancer treatment. So take a look at DRTS.
Okay.
And earlier on, somebody had asked for a quick look at Huma, Huma, which is another biotech. So maybe look at both of those names really quick. All right, SMCI. I'm excited to hear your take on this one. Any new news or update on what's happening behind the scenes at SMCI, Thomas?
Well, so the last results came out not too long ago, just a few days, and they were pretty decent. Revenue up 122%. It did fall slightly short of consensus. But what I think we have going on here with the stock is kind of what's been overshadowing it for the last 2 or 3 years, is that the business is good, but they have governance issues. There was the concerns about them shipping GPUs to China. There's investigations going on. You see this in the analyst outlook. They note the strength of the business and the potential for future gains, but also the lack of clarity, lack of trust, and the need to sit on the sidelines. Reflected in the stock price action. The market advanced last week, but it failed to cross above the critical moving averages. To me, it's just moving flat and sideways over the last couple of years. Probably going to keep doing that, maybe in the low end of the range until we get some better news coming out. So meanwhile, Supermicro's strategy is to hoard all these components so that it can be ready to build servers as needed as people are building their data centers. What this means is its inventory is swelling, its cash pile is dwindling, and there's risk now of some dilution. I've seen more and more chatter about this potential debt raises or capital raises, and that's just going to put another overhang on the market and potentially keep it from moving higher in the near term until it's able to start fulfilling orders. And that kind of comes down to its end customers ordering the servers to go into the data centers that they're trying to build, that they're having a hard time getting to because there's not enough power. So right now, this is just kind of a supply chain play waiting to happen. It's a bet to see if they do or don't need more capital to get through to the end, and whether or not between then and now they do something else to make us not trust them anymore. So it's a big ball of wax. There's reasons to want to buy it, reasons to want to hold it, reasons to want to avoid it, and reasons to just stay away from it.
All right, very good. Yeah, that's a good take on SMCI. I think last time you said you wouldn't touch it with a 10-foot pole because of what was happening behind the scenes with that one and being able to trust the
Right.
company. So, has that cleared up at all for you, or are you still feeling a lot that way?
I mean, it really hasn't, because this is, to me, it's just an ongoing, lingering governance issue that was tied back to the problems they were having before with their reporting. There's just really a lack of oversight and questions about what's going on behind the scenes that we don't know about.
Yeah, I think that's fair. There's a lot happening with that one for sure. All right, let's look at a couple of other on the tech space stocks. The NVTS is an earlier comment we had, and we've talked about Navitas before. Let's give an update on where that is at, and then a quick look at Redwire as well, RDW. All right, let's get to our other super chat, DRTS. Chris, what do you have with this company?
Well, so yes, this is it's a medical technology company. They're developing targeted alpha radiation therapies for the treatment of solid tumors. Sorry, the company's name is Alpha Tau Medical, and the ticker symbol, like you said, is DRTS. So stock is up about 36% in the last week, and that brings it up to about 108% for the year. It's pretty obvious when I'm just looking at a quick glance, pretty obvious to see why it had two very significant updates last week. So it announced that it had completed enrollment of 88 patients in its trial testing for a prostate cancer treatment. And then also, and perhaps maybe the bigger news down the road, is the fact that it announced interim results for its U.S. trial for a treatment for glioblastoma. So that's got investors excited. Company reports earnings, looks like next Monday before the market opens. What should investors expect? Well, this is a company it's clinical stage. So there's no revenue. There's not going to be next Monday when they announce earnings. They're not profitable. That's not going to change. They're going to be looking for, to see, I think one of the things they're going to be looking for is how much cash does the company have on its balance sheet. Right now, from what I'm seeing, analysts are saying it's got enough cash to get through 2027 or maybe into 2027. Let's see. Roughly into late 2027. So they've got to execute well. They've got to execute almost flawlessly to make sure that they could get these trials to that point, and perhaps to a point where they're generating commercial revenue. But yes, it's an exciting stock, but there's still a ways away before it's going to generate commercial revenue. That doesn't mean it's not a good stock to invest in. Just means I think scaling your position is probably the way to go. You don't have to worry about getting all in on this one right away.
All right, very good. Let's do a really quick look at Huma. Again, I think this one popped up maybe last week for the first time.
It did.
Any new updates on that one, or is there still just a lot of potential growth factors for this one?
It's a lot of potential growth. It's got earnings coming up this week. So I think, again, there's going to be a lot of people looking at those earnings results. The thing I think I would be informing investors, again, I don't think you have to rush on this one. There's key events for Huma coming up in the second half of this year, and there's a bunch of them. So I'm not going to go through them right now, but investors should really look at that, because there's I'm seeing about 3 or 4 key events coming up in the second half of the year. Those are FDA milestones. If those go well, yes, you could see Huma stock go up. But again, this is one that you don't have to rush to get in. It's only trading for $1 right now. I know the analyst price target is very enticing. Analysts are saying $7.71 and it's trading at $1 right now. You don't have to rush on this one. Just let it ride. If it's going to be, you're going to probably have a lot of traders that are going to want to get in here. But if you're looking at this stock as a long-term one, you don't have to rush it. Just, scale in, watch those positions. It's got about 21% short interest. So
Yep.
it wouldn't take much on earnings report to probably force some of those short positions to close. But that still isn't the right reason to go in long term. The right reason to go in long term is if you really believe in what the company's doing. And that may take till the second half to really see if that's bearing out.
Yeah, and it may take even longer than that too before we actually see any of that potential showing up. I had also pulled up that short interest. It's interesting that a company of this size has almost 50% institutional ownership. So institutions are paying attention. The one other thing, I agree with you, Chris, that the analyst forecasts are why people are excited about this one, why it keeps popping up. But that forecast is so high because one person gave it a $25 price target. The same day, someone else gave it a $3 price target. So know that there's some varied price targets out there that can sometimes look impressive or maybe have it come across one of your screeners, but it doesn't mean everything. Awesome.
Right. I mean, the biotech sector, it's wild, especially in the clinical stage, and you've got to really believe in the science behind it, and you've got to believe that it's going to get through it, and then you've just got to have the patience to hold it. I mean, that's it. I'm not saying that the company's not going to make it. It's just it's still in that clinical stage. There's always that risk. So.
All right, Chris, I am going to have you look up your favorite one. I feel like we cover this every week, but somebody just did a super chat, and it is a relevant time to update, and that is SoFi. The question from the viewer is, I've been holding onto my shares. The earnings are not translating into the stock price. So take a look at that, what came out in that SoFi earnings report. And there's a few other people who are commenting on it too, saying same, they've been looking at it as a good stock, and why is the market not responding to SoFi? So we'll take a look at that. Thomas, let's look. I'm going to have you cover the other super chat that was earlier. Thomas next in a little bit. But first, let's get to NVTS and Redwire really quick. What's happening with NVTS right now?
All right, so Navitas is amid its shift. It's shifting towards like data center construction, data center semiconductors, and it's important because it makes the power semiconductors, the wide bandgap semiconductors, the gallium nitride and silicon carbide chips, similar to the ones that are made by onsemi. But they've also got a new partnership with NVIDIA to provide chips and infrastructure for NVIDIA AI data centers in the future, and that's driving a forward outlook. But right now there is some risk that the market's kind of getting ahead of itself because the company is still in a contraction. We're looking for growth to resume next year, but this year it's in contraction. We're not going to see revenue not going to see earnings or profits for quite a few more years, and so that does raise a risk of this market topping out. That said, I think the analysts are starting to warm up. Hang on. Right, but we're definitely sentiment has definitely outpaced the analyst. The market is up, 40% above the consensus estimate, suggesting a significant opportunity for a price pullback. But that happening, I would say it would be a buying opportunity based on the company's position, the new partnership, and the expectation for growth to resume later on this year.
Yeah, any thoughts about where it is soaring right now as far as those analyst sentiment for this one? It's above the consensus price target, but there are some crazy high estimates out there too of it being, not crazy high. I guess there are analyst price targets where it is actually trading today. Do you think that analysts are just trying to catch up or haven't caught up to this yet? What are your thoughts on that sentiment for this one?
Well, so this is a market in discovery. So the company is in a shift to this business that we know is very big. We see some positive signs. So we think that Navitas business is going to continue to grow over time. So we're kind of waiting to see what's going to happen. So we see that uncertainty in the analyst sentiment trend and the revisions because there is kind of some wide gaps and some differences of opinion. Still pegged at a hold, but assuming the company follows through on this transition, we would expect to see the analyst sentiment firming and helping to cement and firm the uptrend in the stock price. But until then, there is certainly going to be some risk of the stock correcting back to that consensus target while the company grows into the outlook. Assuming that happens, any pullback that happens would be a good buying opportunity.
All right, very good. Now I'm going to have you do the other super chat that we had. Thank you for doing that. This one is Hive, HIVE. This is one of those Bitcoin miners that maybe might be transitioning. I remember covering it on a video I did months ago. So take a look at that. I think it's kind of in the same space as Iron or Applied Digital. So we could maybe do a quick update on what might be happening with those names too.
All right.
And I did have a request for you to weigh in a little bit on SoFi with Chris here too. So we'll see if you have any thoughts after what Chris has to say about SoFi. So let's get to SoFi, Chris. Why are we not seeing any kind of reaction in this stock right now?
Oh boy. So the simple answer, Bridget, is to me it's the immediate concern is that when the company reported earnings, they had a great earnings report, but they didn't increase their guidance. They just maintained their guidance. But that could be something where it's going to take a little while for the real earnings report to sink in, because what the CEO said was he didn't raise his guidance because his initial guidance was based on 2 rate cuts this year, and the new guidance, which he maintained, is based on 0 rate cuts. So it's actually a fairly good news that he maintained the guidance, although not expecting to see the same rate cuts. It sort of follows a pattern that I've noticed with SoFi. I put it in my list of stocks that are the yeah but stocks, because this is a company that it continuously kind of under promises and then it over delivers, and investors still don't like it. I think that investors are at that stage where some look at it as, well, it's a bank and it's a finance stock and it should be priced that way. Others look at it as a technology company and it's on the leading edge of fintech and it should be priced that way. I think it's undervalued where it's at. I think it's still, I mean, even with everything I just said, the stock's still up about 23% in the last 12 months, but it's off to a terrible start this year and it just can't seem to get momentum. I think it's undervalued here. I'd be intrigued with it. But that's my reasons for why I think it's struggling, which I don't think is fundamental to the business. I think it's just the way people feel about the business.
Yeah, I do think that's an interesting one because we continue to see demand in this area. I mean, the growth in the number is not just for SoFi, but kind of this digital banking, this different way of looking at banking. And I think that's why retail investors are so interested in it, and it just hasn't quite taken off yet. Thomas, do you have any other thoughts on why SoFi is not responding, even though the earnings were there?
Well, I think it's got some valuation concerns. Trading at 26 times this year's earnings, it is pretty highly valued for a financial stock. But like Chris says, this is a high growth tech finance stock. So looking farther out, the valuation falls down pretty significantly. So, assuming the company is able to continue growing into its outlook, today's premium is well deserved. The stock could probably, double or triple over time based on what I'm seeing in the forward outlook.
Good. All right. Well, I am going to have you, Chris, look up another super chat we got. And this one is really interesting. This is not a stock that I have covered before, but it is up over almost 320% in 3 months. So wild growth story. It's SLOIF. And it looks like it's the international company, maybe from Europe. So SLOIF. Take a look at that one, and at the same time, look at INOD. This was recommended earlier as a stock to cover. Both of these have crazy growth stories. And for those of you who don't like to look at a stock after it's run up, one thing that we just like to do is we look at stocks that are newsworthy or interesting to talk about. And when they've had these massive run-ups, if they're not on your radar yet, this is a great time to kind of get these huge growth stories on your radar. Know that these are names to follow because they've had just explosive growth recently. So that's what this is about. Thomas, let's get over to you first. I'm going to have Chris do those 2 names next. Let's look at Hive first, and then what else is happening with some of these other Bitcoin miners turned data center stocks.
Right. So Hive appears to be trading at a bottom, potentially getting ready to move higher. It is amid a shift from being a pure play data center or pure play Bitcoin miner into a data center AI infrastructure provider. Right now, what I'm seeing in the news flow are just things that are validating its shift. For one thing, we know there's a lot of demand for these companies. We see that in all the other reports, results from all the other providers. But along with that, the company is aggressively investing in its shift. Also had a really successful capital raise. Looks like it's well capitalized, at least for now. So just a matter of wait and see it get the contracts. Also in the news flow are some pretty obvious signs of people using the technology. They've got some data centers in Europe that are getting a lot of demand and being used by some high profile names. So it looks like this is a pretty decent play. But again, it's an early stage one, and it's just going to take it some time to grow into its outlook. That being said, there's probably going to be some volatility along the way. Looks like there could be resistance near 350, probably near $5, and then possibly a ceiling in the $6 to $7 range until we start really seeing some traction with the AI, with new revenue, new contracts, and a path to profitability.
Yeah, let's talk a little bit about the volatility that this one saw, where it hit that near $7 mark for a while, back in like October, November timeframe, and then came
Well,
down.
right.
What do you know what was behind that volatility, and could we see a run up like that again, where it just sees this extreme growth trajectory?
Well, I bet if we put this chart next to some of the other GPU as a service providers, we see that spike coincide with some moves that they made as well, which is just part of the whole hype surrounding the data center as a service business industry.
Yeah, I think that you're probably right about like that. And let me actually just pull it up here quick. I've got Applied Digital as one example, and yes, it did see a spike almost exactly at that same time frame where there was
Oh
a
yeah,
lot of
look at
interest
that.
in it. But when you look at it, I mean, it's also kind of, this one has kept most of that growth, and now it's soaring even higher. This one's up over 720% on the year. Why is Hive not continuing that growth story? Is it just further behind where Applied Digital might be?
Yeah, it's much further behind. It doesn't have the it's got the affirming deals, but not quite the scope and the scale as the other companies.
Yeah, and speaking of other companies, I just wanted to give a quick look at Iron as well. So let me try and pull up that chart as quick as I can. That one is another name that continually comes up on MarketBeat Mondays too, and it's very similar to Applied Digital. Have you looked at that chart recently, Thomas?
Yeah, it's moving up from the bottom of its trading range. It looks like it could be moving into the upper portion of a trading range up above $60. Based on what I've seen in some news recently, Iron's results upcoming should be pretty strong. It's definitely had some good pipeline news over the last couple of quarters. April, right? And so results are due. Oh, it recently reported. Oh, so just a few days ago, right? Well, it did have a contraction. It missed. That's not good news. Expansion plan. Right. So the ongoing story, they're investing in the future. Future still looks good. Probably a high bar was responsible for the miss this time. You look at the stock price action, that kind of reflects that. It pulled back some, but didn't really give up too much of its gains. Still looks pretty well positioned to advance. It may take another quarter or so for the market to gain some more really good traction. But again, there could be news coming out really at any time that's amplifying the future revenue outlook.
Okay, perfect. And then Thomas, I did realize I forgot Redwire. I was going to have you talk about it, and I just completely breezed by it. Apparently, this one's been doing a little bit of a run up recently, and I've got the chart here. It does look like it's up almost 10% today, and up
Right.
about 32% in the last month. What's behind the growth story here?
Well, so space is a big business. It's in the early phases of what I see becoming a big boom that'll be unleashed by the SpaceX IPO, with the increasing number of launches, the increasingly positive outlook for the commercialization of space. All the companies that make space products, including Redwire and its components, will be doing very well. So within that story, Redwire is participating in a $6 billion contract with the government to provide space components over time. The latest story with that is that $6 billion is probably not going to be the ceiling. This is basically like an open-ended long-term contract in which the government can just continue to buy product from this company as they need it, which really juices the outlook. So this stock is in reversal right now. Today's move brought us up to a critical resistance point near the baseline of like a head and shoulders pattern. If we can get up above 1250 the next couple of days, I would call this market in reversal and start expecting it to gain momentum and potentially, begin advancing pretty strongly by year's end.
Yeah, just quick look at some of the things that stood out to me as I'm going through this. It's clearly spending a lot of money right now. It's in that deep spend phase. It also has very little institutional ownership, so the institutions aren't getting there yet. There is some short interest. It's nothing. In this type of a stock, 14% short interest is pretty common, pretty typical. So it's really about that future outlook. And I think you're right. I think this is one of those names that when we talk about that SpaceX IPO, Redwire often comes up as a potential for being impacted along with it. So.
Yeah.
A good one to look at. Anything else you want to add on Redwire, Thomas?
Just generally speaking, I think that space will be the next big boom after AI. I see it starting to gain traction now with the upcoming SpaceX IPO, and there's lots of traction in some other space companies as well.
All right, very good. Thomas, I'm going to have you look up another super chat. Thank you guys for doing this. It makes it easier for me to figure out what to talk about. Let's do AAOI. This is a company that's up 23% today. Let's try to figure out why. AAOI. And then another one, another super chat. Again, thank you guys for this. Greg wants to hear about Sony. So different names. One I'm not sure what it is. Sony, very familiar with. I'll have you take a look at both of those, Thomas. All right, Chris, let's look at these huge runners right now. SLOIF. What even is this company?
So the company it's a French company. It's a semiconductor material company. It's a 30-year-old company. It manufactures engineered wafers, which are the substrates that chip foundries build semiconductors on. And so the excitement over the excitement over the stock is the fact that it's moving into that photonics area. It's initially what was really driving the growth of it was the smartphone industry, and so it was up sharply in 2021 and 2022, and then it fell off a little bit as that market has kind of matured, but it's coming back here with this idea of they have it's an expansion of the technology that they're currently using, but they're moving into that photonics area. Right now, I think it's just a question of the stock's kind of gotten ahead of the revenue story. Investors are going to want to not be careful with this, but they're going to have to do their due diligence on this. It's not a U.S. company, so you're probably going to be having to dig a little bit. Look on their website, try to find out the financials for yourself. Stock looks like it's gotten a little bit ahead of itself here, but it's a name that it's in that chip space. Chip space is not going to go away. There's a story here. There's a long-term story, especially in the photonics area. But right now, the stock looks like it might be a little bit extended. I mean, at 677% higher year to date, that's kind of a warning sign.
Yeah, that's a huge run up for a company like this. And again, There's not a lot of data on MarketBeat for this one, which makes it a little bit harder. I think that's something you find in these companies that aren't U.S. companies that it's more, we don't have quite as much available for them. But the run up is impressive. So if you happen to be holding that, who's ever watching, again, I love, quick shout out to those who are watching from somewhere that is not the U.S. Again, I love to hear all the countries that people are watching from in the comments. It's great to see the community of people, of investors we have from all over the world watching. It's the power of YouTube, and I love it. But anyways, I love to hear these different stocks that we get to find out from having people from different places. So thanks for bringing that one up. Another one that I think we've covered maybe once before. This is that Innodate company. Innodata, INOD. This one also has a very similar massive run-up chart. I think this one's up 191% in a month. That is hockey stick growth.
It is, and the reason behind it is, okay, so you see the 191% 1 month growth. Look one column over from that, it's 123% in the last 5 days, and that's been since the earnings report. The company they hit it out of the park with their earnings report. It was a strong report. EPS came in, 6 times what it was expected. Adjusted EPS came in at 42 cents a share. The street was expecting 7 cents. They blew out the revenue too. So just a great report, and that's what's seeing the stock that's seeing the stock move higher. There was about 18% short. Well, there's about 18% short interest now, so I'm sure there's probably a little bit of short covering going on with that as well. Again, it's one of those things that you've seen that hockey stick move. You seem to be giving me a lot of these the last couple of weeks, Bridget, but the hockey stick move like this, I'm going to say you're going to have to look again for the more likely option right now is it's going to pull back before it's going to go up again. So good company, great company, and had a great earnings report. I don't have anything bad to say about the company, except I don't like where the stock is right now if I were trying to get in on it.
Yeah, I was going to say, I would love to hear in the chat really quick if anyone owned this one before the last 5 days when it was up over 100%. I mean, it was at $45 a week and a half ago. And I think I remember, again, I'm pretty sure we've covered it on the channel at one point or another, probably in a MarketBeat Monday live stream. And it's also interesting to see that analysts were forecasting this. I mean, we have some high estimates at 110 even before this report came out. So there were some high expectations pretty early. Yeah, this is somebody saying that this stock is 110 back in April 10th. And I think that is interesting to look at.
I think one thing that's interesting for me to note is, and that doesn't mean they won't, but I'm also noticing that I'm not seeing any analysts that have raised their price target since the blowout report. Again, not saying they won't, but it is interesting that they haven't done that yet. So that's also suggesting that a lot of that growth may be priced in. One thing I did notice, though, is if you look at the earnings outlook, I mean, there's an expectation for 87% earnings growth. So, there's something to be said for that as well.
Okay, very good. Crick, I do like to wrap it up right about this time, but a couple of names that popped out of that are apparently moving on earnings in different directions. MVTS, I think.
I'm sorry, Bridget, what was that?
I want to get back to it. I'm sorry. It's down on earnings, not good news. We've covered it before, and that's why I wanted to check in on it. And now I'm scrolling back through all of these comments to try and find somebody comment really quick if I forgot. It's one that's down on earnings today, and it's an MVST. There we go. MVST. I know we've talked about it before. Down 32% after earnings. And then Qualcomm was the other one to talk about. That one is going up right now. So why don't we do that one really quick? And Thomas, let's get to these super chats before we wrap up. AAOI, what is this company?
AAOI, this is Applied Optoelectronics, and this is another photonics company. Photonics is really important for data centers and AI because it helps connect the GPUs and the servers together in a high speed, low latency kind of a way. They've been mass shipping in volume their next gen products. They're giving good forward outlook. They just got a grant to expand their manufacturing facilities. Institutions are buying at a pace of 3-to-1, and the analysts are driving sentiment. This looks like a win-win to me. The charts are very strong. The rally's driven with high volume. We've got converging MACD. Right now we're in consolidation. We might see some volatility over the next couple of weeks, but it looks like this market's setting up for another move higher.
I feel like this story we're on a broken record of these massive moves in these companies. What is going on with this? Is this all an AI story, Thomas?
Well, this is all the nuts and bolts to connect all the NVIDIA GPUs that have already been sold. So you got to think all those GPUs have been sold. They all are heading to data centers. They've all got to be plugged in. And this is one of the companies that's going to connect them all together. And so that's driving the outlook right now.
Really quick, when you're in a company like this, if you were one of those people who was in before these massive run-ups in just the last couple of weeks, do you take some profits off the table? Is it possible that these stocks could go down just as fast as they went up? Are these stocks rising too fast that you maybe need to take some profits? What's your advice, Thomas?
Just bottom line, the stock rose from $20 to $180. You need to take some profits because they could evaporate. And even if they don't, it's just a smart thing to do.
All right, that's solid advice on that one. Let's take a look at Sony really quick. This was another super chat. Again, thank you for doing that. We appreciate it. What is going on with the Sony Corporation? Thomas, did you have a chance to look at Sony?
I didn't I don't know if you told me before, I didn't pick up on it. I'm sorry. Well, it looks like they're at a bottom. The market bounced this morning. We could be at a bottom and reversing, but we're still below critical resistance. Let me check on the news, see if there's any news that came up.
Why don't you take a look at that while we get to one of the ones that I told Chris to look at? NVTS. Did you see anything happening with that?
Did you say MVTS or MVST? I thought you said MVST.
Oh, I did. Microvast. I did mean Microvast.
Yeah,
Yes.
I'm looking. I'm even looking on their corporate investor relations page. I'm not. They reported earnings after the bell, but I haven't seen the results yet. But I'm.
It does look like it's down in the extended trading quite a bit.
Yeah, so they must have delivered a poor report, but again, I'm just not seeing. I'm not seeing the results yet. So
that's fine. It's late in the show for us.
Maybe they haven't reported it yet, and it's just that the anticipation of it. But yeah, I'm not seeing the results. It's an energy storage and battery company. So obviously, if their numbers didn't hit well, that's probably. Hold on a second here. Okay, I've got it, Bridget. So revenue of 60 million was down 48% year over year. Gross margin was down about 5% year over year. Yeah, so it was a miss on virtually everything, and that's probably why the stock's going down.
Yeah, if you're holding onto the stock right now, what do you do in this kind of situation when you see the slide happening?
Well, boy, I mean, if you're holding the stock right now, I think you're going to have to. Let's see. The stock's was trading at $2.02 going in. It's probably going to be down to about
$1 right now.
It's down to $1 right now. I mean, I think it's just you're going to have to listen to the call, which is supposed to be happening very shortly, and then kind of make a determination for yourself, because if it gets below $1, you're going to start having problems where the stock might have to be in that delisting area. I'm not saying that's going to happen, but the stock's down about 27% year to date, and that's even after it was up 22% in the last month, and I'm sure that's going down. So this is one that you're just going to have to really this one is one you may have to let go of, but it depends on what your position is at that point.
Yeah. And I said I'd do a quick look at Qualcomm just to see what the chart is doing there. I'm just going to pull that up full screen really quick. It looks like Qualcomm is up 85% in a month. That is a big run up for a company that most people are familiar with, especially after the downtrend it's seen. It was really getting to that bottom in that April time zone, and then boom, up to 230 from 125. Any idea why?
Well, the company is moving beyond Apple, and so it develops. For a lot of people that aren't familiar with Qualcomm, a lot of their business comes with their custom silicone work that they do. That a lot of their business comes from smartphone business. Particularly, they've had business with Apple, but they're also saying that they're doing some custom silicone work with a large hyperscaler, and that's got some. That's what's got the analysts excited, because again, we're starting to see the fact that investors have now pretty much gotten on board with the idea that this AI data center build out is not hype, and that it's really happening. And so then you have a company like Qualcomm that's saying they've got an investment in that. So
good. All right, very last one, doing Sony to get to this last super chat. Do you have any other info on Sony right now, Thomas?
Yeah, right. So the recent results were kind of in line as expected. So it didn't really provide a lot of catalysts, but that's not a bad result, not a bad guidance, and aligns with the outlook here with the chart for bottoming. The chart shows this market is sold off, but it's overextended, and now we're kind of set up for a shift. It might take a few more weeks to get the momentum to build, maybe even a little bit longer. But it does look like Sony stock is at its bottom and preparing for its next leg higher, which could start, midsummer or early in the second half of next year, or second half of this year, I should say.
All right, guys. Thank you so much for staying late today. There were so many good names on here we didn't get to. People said Credo, Resolve, Intuitive Surgical, Poet. All of these names are names we've talked about on the show before. We will talk about them again. I'm sorry we couldn't
Right
get to
on.
all of them today. It's been a long day. Chris and Thomas, thanks again for your time. And thank you, everyone who stuck with us for the whole show today. Lots of great names in the comments. So great to hear from you. And thanks for sharing where everyone is watching from, too. We love having you join us live every Monday at Market Close. We'll see you again next week. Until then, happy investing, everyone.